And hello, everyone. Welcome to Professional Insights, brought to you by the National Referral Network. This is where we have conversations with professionals for the benefit of everyone who would take in what we're saying this morning. Today, we are talking to, is it Duke Heninger? I think that sounds like a Texas lawman to me.
It's a difficult name, I know. I've had to help a lot lot of people with it, but
Yeah,
you said
I later on, I'm going to ask you if you've ever broken up a bar fight with that name. It seems like you
I'm
probably
not as
do.
strong as I sound.
Duke is one of the partners in a company called Ampleo, and they are an outsourced CFO firm, amongst other things, who perform CFO functions for small business and a whole host of other things. And I was in talking to you before we got on, I was especially interested in why small businesses need you and why what you do is often overlooked. Thanks for being here. Could you go into that for a minute?
Yeah, sure thing, Mike. Thanks for having me. So what we provide is, CFO services, but what really is a CFO? It stands for Chief Financial Officer, but oftentimes at smaller companies, especially, the CFO can be a term that can simply be given out probably incorrectly. It's often given to, whoever the financial leader is, and sometimes that financial leader is only a one person. Maybe they're just a transactional accountant. A CFO really should be the person that can provide the strategy, having done it before, knowing what to do and how to do it.
So the CFO is like the quarterback of the company's finances.
Correct. Yeah. Yeah. Overseeing all of the financial function.
Okay. And when you work with small businesses, what are the kinds of things that are being often overlooked?
Well, I'll tell you a few reasons of why we get called in, and maybe that can help explain that. We get called in because business owners are frustrated. They're frustrated with a lack of knowledge, is really what it is. And they think, my accountant is not providing great information. I think we need to replace this accountant. Or my outsourced bookkeeper is not doing a good job because all they do is just record transactions. They don't give me any insights. And so we get called in thinking, and we look at their bookkeeper, we look at their accountant, we think they're doing a fine job being an accountant or being a bookkeeper. And but what the leader, what the CEO or the owner or founder really wants is guidance. Like the area of finance is the least understood area of a business. Generally, the founders are really good at marketing, sales, operations, but the finance function is kind of an ethereal thing that they don't really understand. And so we come in and we give them strategy, insight, and a pathway forward for success. And then we measure ourselves against it as we go along to make sure we're going down that path that we all agreed to.
So do most CPAs or tax preparers know how to be CFOs for their business owner clients?
I would say shortly, no. I'm a CPA. I came from public accounting. I was an auditor, and I did that for a number of years before I left into industry. And when I left into industry, I thought, I know what I'm doing. I'm a smart guy. I've been doing this for lots of companies. And I went into this new company and I provided all of these compliant forms, I guess, and depreciation schedules and asset listings and everything tied to the financials. And nobody cared.
Mm.
They didn't care a lick of what I did. And all they wanted to know is, where is cash going? Where is it coming from? Why are margins changing? Why are we less profitable? Or how do we improve profitability? It was a totally different way of looking at it. Instead of looking at it through the lens of compliance, it's looking at it through the lens of being helpful to a business or managerial accounting.
So see, whereas a CPA or tax preparer might be looking at it through the lens of, well, let's just say putting out fires or keeping fires from erupting, a CFO is looking at it in a much more forward-thinking manner. Is that correct?
Yeah, that's partially what it is. It's looking at, okay, well, beginning with the end in mind, where is it that you want to end up? And let's back into today to figure out the path forward into that. And do you want to sell in a few years? Do you want to build this up into some, empire? How do you want to pass this on to the next generation? Or really just understanding what is your goals? What's your exit strategy? That's a question that I ask early on to our clients. How do you plan to leave this company? And what are you doing today to prepare for that?
And how often when you ask that question is the answer, I don't know?
Oh, like half the time. I think many founders don't quite know what they don't quite know. And in the startup world, there is a lot of, many founders are told through investors, VCs, what to expect in the whole process. And so they're listening through the lens of that particular investor or VC, which might have a different strategy in mind than maybe what the owner really wants. And so it's helpful for us to come in an unbiased way and be able to paint the picture for them of what all the different options really are.
So is it true that, and we hear this a lot, is it true that most small business owners are their own worst enemies when it comes to things like this?
Um, Many times, yes. And it's just by the limitation of their own understanding and knowledge about what they really need. And they're trying to get it from maybe a lower cost source. Like an accountant, maybe an accountant maybe costs $50,000 a year, where a CFO is going to cost between $200,000 to $500,000 a year. Well, we definitely don't need the CFO, so let's go over here. Not even understanding what the difference really is, but along the way, realizing they need something that they're not quite getting.
So obviously that's some small business owners will hear that and say that's a big ticket item. How is that justified? Meaning, how does it ultimately pay for itself?
Well, what we want to be able to provide value. When you look at the value and the cost, you weigh those two things together. When it comes to transactional accounting, I don't mean to offend any accountants here, but transactional accounting is not that valuable. It doesn't provide guidance or leadership. It doesn't do anything except put a transaction into a box, and then which helps you to see how much did I spend. Well, that's looking in the rear view mirror. What we really want to do is look through the windshield and understand where we're going. And that's where the more of the leadership comes in on the financial leadership, the CFO, the FP&A types of responsibilities.
So when it comes to businesses that are growing, it's like you're saying you're growing, your revenue stream is getting larger and larger. You're helping the business owner make decisions about what is the best use of that revenue stream so the business can continue to grow.
A very common question of when we get brought in is, how is it that I can be so profitable, yet I never seem to have any cash? And so we paint the picture and help them to understand, the focus is on the P&L. Everybody looks on the P&L because an income statement is simple. You have your revenues, your costs and expenses, and you get to your profits. Well, many business owners think that is the money, that's the cash that's left over. And some incorrectly take distributions to themselves of that number at the end of the year, when they forget about the fact that they have payables that are coming up very soon. They have inventory and cash is tied up into that inventory, or they have receivables where they haven't yet been paid on those, that revenue. And so we help build the vision into the future, both on a short-term basis as well as a long-term.
So you're not just keeping score, you're interpreting the score and showing the business owner what it means so that the business again continues to grow. Because talk about where and why businesses typically fail for a moment. There is a stage in the business's development where, unbeknownst to the business owner, they're, I don't want to say in peril, but they're getting into a stage of their business that they have to be really, really careful with.
Yeah, it's a great question. And let's start with a little bit of understanding of what's important for the business. It's cash. Cash is king. We've heard this before, but it's very easily forgotten because we tie cash to profits. Cash is different than profits because of the reasons that I explained about your cash is tied up into other things. Your cash has bought maybe a piece of equipment. That's not calculated in profits. Your cash is funding somebody else's accounts receivable or your accounts receivable. Your cash is being consumed up into your inventory. Now, when a business is growing, especially when it's growing quickly, the cash is generally needed to be consumed before you get your profits or your cash back. So you have this difference of time, and this is called the cash conversion cycle. It's when did money go out and when is it going to come back in again? And that's where businesses often fail. They get themselves caught into a position where they can't make payroll, they can't pay their debtors, or they can't pay a key supplier. And now, in any one of those situations, they're no longer able to support their main driver of business success, which is sales. So we have to make sure that that cash conversion cycle reduces down to something that is livable. Oftentimes that's let's go get a line of credit, or let's go raise some equity in this, or let's make sure we raise enough equity or debt as part of this process, depending on how fast you want to grow and you're really expected to grow. And then we track it the whole way to make sure we're safe.
And so, in summary form, as we wrap up here, why do business owners, if you were to summarize why business owners need you, and especially what do they risk by not having some of the functions you're talking about? Why do they need you, and what are some of the bigger risks?
Well, that's a great question. I mean, everyone's going to say they need my services yesterday, right?
Mhm.
And the truth is, when a business is smaller, I think they're okay with having a bookkeeper. But at any point in time, when there's heavy growth or any sort of heavy growth requirement or a capital outlay or anything that's going to be purchasing something large, it's good to have us come in and help structure the strategy around it. The failure often comes from a lack of planning, which oftentimes is more a result of lack of understanding of what's really going on. And then there's a lot of trying to fix symptoms after the problem, which we can help with. But what we prefer is if we're brought on earlier than later, we can craft a plan that's much less expensive than a full turnaround later on and trying to fix a problem. It's easier to solve the problem before the problem happens than it is afterward.
So it's a little bit like going to the doctor, and they catch the cancer early.
Yeah.
That kind of thing.
Yeah.
It's not to be too dark about it, but I think that's what you're saying. Do most business owners wait until I don't want to say they wait until it's too late, but do they wait too long very often?
That is often the case. And we come in and we have to fix major problems that are very painful, that include things like layoffs, debt restructuring, down rounds, those types of things. And we'd really rather have it a positive thing.
Wow. That's well. Want to thank you for being here, and also want to thank you for being part of the National Referral Network. As we remind people who watch this is brought to you by NRN, and we are an association of professionals who exist really to help one another, because we have the ability to outsource to one another, and everybody in the network is a top shelf, squared away Marine. I think Duke has given an example of that here today. Duke, thank you so much for your time. You can see across the bottom of the screen, there's his contact information if you need to talk to him further. And we will be back next week, same time, same station. Thanks for being here, everybody, and we will see you later.
Thanks, Mike.